Hello again, everyone. In this technical analysis of the stock market video, I call it December again, question mark, because a lot of people have been interviewed. I've been watching folks this last week and have been interviewed. They've been asked, does this feel like mid-December? Do you think we're in what's going on? What happened in December? It got pretty nasty. What do you think? And a lot of people are just like, well, I'm not sure. I don't think so. Honestly, I think a lot of people were, very much caught off guard by the damage that occurred in mid to late December. And so now they're trying to, basically assess, do we think the same thing is happening again? I think there's a real good high probability that we're going to get a close replica of that. We're going to go back down and retest the December lows. But in the wave structure, the wave count that we're in, I think it could get a lot worse. So stay tuned. Let's take a look at that. All right, we're going to start off. We're going to look at the Dow Industrials here. Then we're going to look at the McClellan Oscillator to see what it's telling us short term. And then I want to check in with the Japanese yen, which has a tendency to act as a safe haven. So let's start off here with the Dow. Here's the daily view and with what I call my moving average view. So what's this dotted line? The dotted line is 25,210, and you can see that really pretty much runs right through the all of the oscillations that occurred October, November into early December. Pretty much divides right through the middle of that, and we came back down and we tested the into that area on March 11th, March 8th, and March 11th. Bounced off of it, came back down and tested it again on May 13th, bounced off of it, and now this last week we broke through it, okay? On Wednesday, Thursday, Friday, we've come down, and Friday we were down 355 points and selling off right into the close. Pretty negative action, pretty negative close in here on the Dow Industrials. Let's take a look at the wave structure and the wave count. So what I'm focused on right now is this is a daily view again. Here's that support line that I just talked about. I believe that right now we are in a third wave of the C wave. Okay, we're talking about an A, B, C. I'll focus more on that in a minute. But right now the C wave, because this is a flat, a three wave, flat, this is expected to be a five wave. A flat is always a 3, 3, and then a 5, okay? So what I'm looking for right now is 5 waves coming on down to complete this C wave. So I don't believe we have completed the third wave of that 5-wave structure yet. A normal length wave 3 from the Dow count is going to come down here in the neighborhood of 23,680, let's call it, 23,680. Well, that's another 1,200, 11 to 1,200 points below where we're at, where we closed on Friday. Now, that could happen pretty quick. Third waves have a tendency to be very strong in here, and that's the other thing. C waves of a flat pattern have a tendency to be very strong also. All right, so that's where we're at from a daily Elliott Wave perspective. Let me make sure I'm not missing anything. Let's take a look at the weekly view. All right, so now what are we looking at from a weekly view? We're looking at this wave count as if it's an intermediate wave 4. And here's this flat structure I just talked about, this A, B, C. Notice how B went all the way back up and retraced almost all of A. Okay, so again, we have our three wave, and now we're working a 5-wave structure down. Okay, and C waves, the initial target on a C wave is where C equals A. So that's what I'm looking at right here, C versus A. So when I look at C versus A, 100% is where C equals A. Well, that's 21,506. Okay, again, 21,506. That's 3,300 Dow points below where we're at. The other thing to think about, we took 12 weeks to complete wave A. Okay, 12 weeks. We've currently had 5 weeks in here. So if time-wise C is equal to A, and again, I don't have any expectation that it's going to. There's no law that says C's got to equal A or that type of thing. But if it were to equal A in terms of time frame, we'd have 7 more weeks of selling. Okay, so that's the picture there. Now, let's focus on the fourth wave. So what am I talking about? I'm talking about the fourth intermediate wave versus the third intermediate wave. So let me zoom back out. Let's go this way. This is a bigger picture. Okay, so since we're talking about a flat here, I have a sharp zigzag for wave 2. We've got a very strong, prolonged wave 3 in here. And so when I look at 4 versus 3, here's where it's 23.6%, okay? That's down here very close to the 100%. So that'd be a pretty shallow wave 4. And then a normal length wave for it, about 38%, is 18,179. Now here's the other perspective on that, okay? A lot of times when you correct, especially when you're correcting the fourth wave, you come back into the prior fourth wave of one lower degree. Well, what's one lower degree? Right now we're working the intermediate degree, okay? So one lower degree is the fourth wave within the previous third wave. Well, that's right down here, okay? And if you look back and notice, you know, that's exactly what happened in almost all these other wave structures. And you could see it repeat over and over again. It's not a rule, it's a guideline, okay? So that's something to be aware of. And the main thing that we're going to look at is, okay, how are the wave structures unfolding right now? And that's going to be our guide as to how things are developing as we come on down. So that's the picture on the Dow Industrials. Let's take a look at the McClellan Oscillator. Okay, here's the McClellan Oscillator on the New York Stock Exchange. So the dotted green line down here is minus 150, which has a tendency to denote very extremely oversold conditions. And this is the red line up here where you get above that, it's extremely overbought conditions. So where are we? We're sitting at minus 176 as of Friday. Okay, so we're down in the very oversold territory. Can we get more oversold? Yes, we did. We got more oversold on May 13th. We got even more oversold on March 8th. And back in December and in October, we got even more oversold than any condition that's occurred in 2019. So yeah, we can get more oversold, but short term, this is just to make you aware, that's where we're at from an oversold, overbought condition. Now, when I look back in October, I mean, you look back, you know what happened in October. Well, this was October 5th, you know, just like 2 days after the high in the Dow Industrials. Okay, got to minus 198. Then we bounced back up to minus 151, basically that threshold, and then we got really whacked and we go all the way down to minus 294. So there's no guarantee. A lot of times what I'm looking for is I'm looking for divergences as well as just to be aware of how badly oversold or overbought we are. Okay, so that's the picture there. Now let's take a look at that Japanese yen. Okay, here's the Japanese yen ETF FXY on a daily basis. Okay, so here, look at, I've got this circled here because this is when the market, the Dow Industrials topped right here on October 3rd. Notice how that was a very significant low for the Japanese yen. And then it rallied into October and all the selling that occurred. And then as we were chopping sideways through November, this is what happened. And then in the December move, very strong to the upside. And then during this rally in 2019, this is what the yen is doing, selling off. And then look at, I've got this low marked right here, April 24th, right near the end of April when the market was topping. Okay, and then as the month of May is unfolding, the yen has been rallying again. And look how it broke. Number one, it broke this trend line. Now it broke another trend line here with the move that occurred on Friday. Very significant looking breakout type move here on the yen. But even more interesting, I find, is this longer term view on the weekly chart. Now here's that circled low that I had with the market top in October. But look at this long-term vision and look where we're at. We were right there. We were right there. Now we got right there again at the end of December. So the real key is, do we smash through and explode through this trend line to the upside? Is this telling us that something major is unfolding? Is this kind of confirming the major breakdown that we're looking for in the market right now? I find this real interesting, and I think this is one to keep an eye on as we move forward over the next days and weeks. All right, that's it for this weekend. So if you felt like the video was helpful, please hit the like button and subscribe to this YouTube channel. And if you could think of one person who would benefit from the video, share the video with them. And if you want to get more inside education, trade ideas, become an insider member, just head on over to, let me pull it in here. Head on over to joehenches.net. That's the address right there. It's Beyond the Chart is the website. And check out what we've got here. We've got free market updates that come out twice a week. And you can check out the membership page there also and become an insider member. So that's what's going on over there. We look at these things every single day. Everyone have a great weekend. We'll talk to you on the next video.